Whoa, 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 that's not it. What's up, everybody? Welcome to another edition of Zach's Live Trader. Here with you, as always, I am the people's champ of Wall Street, the bearded boy wonder, Dave Bartosiak. And today, my friends, we're going to be talking about Adobe, ticker ADBE. That, you guys saw that, didn't you? That was kind of funny. That is the screen that I use on my green screen stuff. This happens if you click the wrong thing when you're over here on your OBS studio. Rocking and rolling. Internet's fixed. We knew that already. So everything's going just fine in terms of streaming. Upload speed is great. From what I heard yesterday, everything was nice and smooth. Like we got some AC/DC bumping on my Google Home right now, so that's good. And yeah, it's been an interesting week. Like I was saying in the chat, Trevor, I keep getting interrupted. It's kind of crazy. It's, you know, I've been involved in the stock market forever, just forever. Professionally for over, you know, how long has it been now? Well over a decade. It's been a long time. Anyway, and no one ever bugged me about anything, right? I never got phone calls about any stocks really ever. I mean, every once in a while I'll get a phone call about the stock market, but you know, here we've gone from generational low in March of 2009 to, you know, 25,000 almost on the Dow here. And people don't call me up about the broad stock market. They don't talk about it. They're calling me up talking about crypto, asking me how to do all this stuff. How do I get a wallet? How do I use an exchange? How do I do this? How do I do that? How do I do that? It's crazy. So I don't know if these people are just now getting a few bucks or if they were disenfranchised with the stock market. I don't know what it is. I don't get it. I just don't get it. Because as these new hypes, you know, come and go, I mean, I've got some money in crypto, and it's definitely worth looking at, right? I mean, it's a thing. But it's not the be-all, end-all. And we still got the stock market. We've still got these option trades that we talk about that can make you just as much as they make on an unleveraged crypto trade. So just interesting. But anyway, as part of that, I just getting blown up. I'm getting blown up on Facebook, Twitter, Snapchat, regular old phone calls. I mean, text messages, just nonstop. So it's been entertaining, to say the least. Just like a little aside, you know, it's got me scratching my head. Like, well, I don't like that there's so many people asking about it, to be honest with you. But there is hype, but I would stop shy of calling it tulip bulbs, because what was the utility of a tulip bulb versus what's the utility of a worldwide payment network? But we're not here for a crypto discussion. We're here to talk about Adobe to the cloud, right? Let's kick things off here by taking a look at this price consensus and EPS surprise chart here on Adobe. And I don't know why this line just shows up here. What's up with that? But that's okay. Black line corresponds to the right y-axis, which is price. The green arrows are earnings beats. Red arrows, there are no red arrows, so that's a good thing. Earnings misses. The multicolored lines represent the evolution of our Zach's consensus estimates over time. And what do we have here? Adobe has consistently brought it, okay? Save for these estimates coming down a little bit in 2015, you can see in recent history, they've started low and they've crept up higher, which is a good thing because the stock has started low and crept up higher. Lots of growth here in Adobe, lots of earnings beats. And when we take a look at some of this other info here, you're going to see that it's hard, based on what we got here, to make a really good bearish case for Adobe here in the short run, okay, or the intermediate run for that matter. Everything's very bullish here. In the estimates, in the surprises, all good things. And if you notice, it seems like this 2018 EPS growth accelerated and began to run away from 2017. In the research reports that I read heading into this video, they've got subscriber revenue growth. So they have reoccurring, you know, you could buy the Adobe Cloud, the creative, what do they call it? The creative services web or whatever, Adobe CC, whatever they call that thing, where you basically pay a monthly fee and you get access to their entire suite of software. So that subscription model is something that you see not only in Adobe, but you've also seen it in Microsoft. I don't know how many of you use Office, but me personally, you know, I pay for Office now on a monthly basis. I should probably just buy the annual. No, I think I buy the annual, but either way, it's a subscription thing, right? Adobe's the same way. If you want to do Photoshop and Illustrator and, you know, all those fun things, After Effects, they want you to go ahead and sign up because that gives them real sticky money because you're going to stick around with their product suite as you learn it, as it adds more features. You're liable to stay with them, and you can even get started just for a few bucks a month. So you don't have to make the huge upfront investment in buying all these software packages, right? So that's a good thing. But the subscription revenue for them for this year is supposed to be up 34% on the subscription side. That's a good thing, but that's going to be a number you're going to want to look for in this report. Now, they're going to report after the bell tomorrow, so you got the rest of the trading day today and tomorrow to figure out whether or not you want to buy Adobe. Stare deep into the screen and be hypnotized. Yeah, I'm not a good hypnotist. Sorry, guys. Okay, now let's go ahead and take a look at the detailed estimates page here. Decent day today. Zach's rank number 2 by value D, growth B, momentum D. So not so good on the style scores, so to speak, but after the bell tomorrow, like we said, let's look at the revenues. I wanted to just skip ahead revenue growth here. So I mentioned that the subscriber portion of their revenues, about 34%. Overall revenue growth, 21.32% for the current quarter. Next quarter looks like 21. Numbers are getting a little screwy here on the current year. We're going to look at our G14 classified stuff there to get the actual numbers on that. Next year looks like 19.95. So this is still very healthy revenue growth here for Adobe, despite being a $7 billion in revenue this year. Translate that over to the EPS side, and it looks like they're adding some efficiency. So the current quarter EPS number looks like 28.2% EPS growth. Next quarter even better at 32.23. That rounds out the current year close to 40% growth. Next year 30.45, and this is all without getting any sort of tax reform passed. Hasn't happened yet. Look at the last 60 days. You got 5 analysts upping the ante for next quarter, 8 doing so for next year. But you do have somebody dropping their numbers for the current quarter. A couple have done so for the current year. But let's look at what the overall effect to our Zach's consensus estimates have been. Current quarter went from $1.07 to $1.15. Next quarter from $1.17 to $1.24. Current year from $4.04 to $4.20. Next year from $5.06 to $5.47. So bullishness here. Small beat is what you should come to expect. They do a good job of managing these expectations. Now, see, look at this. Did you guys see a red arrow? I didn't see a red arrow. Oh, next quarter. Sorry, I'm looking at the upside. Sorry. Getting ahead of myself, guys. Surprise here. Small surprise. 10 cents, 8 cents, 7 cents, 4 cents. So Nothing out of the ordinary. They do a decent job of setting the expectations there on Adobe. Revenues. Let's dig in this a little bit more. Look at how Adobe's revenue growth has accelerated since 2014. So as they've introduced a subscription model, it's been a little bit better for them, which is great. I don't know about you guys. You ever mess around with any of this Adobe software? So I have. I've dabbled. Photoshop and stuff like that. After Effects, I started learning that a little bit when I was doing some of my video stuff. And back in the day, it was prohibitive because who was going to spend $300 for Photoshop when you could bootleg it for free? So what they ended up doing is they introduced a subscription model, and now it's like, hey, just give us whatever it is, $8 a month, $10 a month, and we'll give you the whole suite. Maybe it's $15, I don't know. There's different packages. And I think that certainly helped. And then plus you've got the expansion of video across the web. And they've got obviously web design software too. So they got all sorts of, a whole suite of creative software packages for you. And it's helped them out. And this has accelerated this revenue growth. So now you're looking at almost $2 billion for this quarter. Should be the same next quarter. Just kind of creeping up there a little bit. These numbers are nice and healthy year over year. No big spike. Looks all right. And on the EPS side, we'll do the same. So in the dark days of 2013 and 2014, they struggled. They actually had some contraction in EPS. Since then, it's been off to the races. So 96% growth, 70% growth, 38.5 this year, 34.5 next year, 20 out into 2019. So still looking for some aggressive growth here over the next several quarters for Adobe. So you'd expect this to trade at a little bit of a premium given those huge growth numbers, and that's exactly what you get. 36 times future earnings. The S&P is all the way up at 19 now. So that's a pretty hefty number. Not as hefty as it was back in 2013. You know what, Bill? We should. I shouldn't have done this at 1 o'clock Central Time, knowing that the Fed was going to do that. But here's the thing: the Fed. I saw that Fed. That was a foregone conclusion. We pretty much already knew, so I didn't expect it to be any earth-shattering sort of event. So thanks for throwing that in there with us. But I guess that's my random thought of the day on the Fed. Okay, so back to Adobe here. A little bit of a premium. That's to the overall market. We can do their sub-industry, the computer software market in general, also trading at a premium to the rest of the industry. Now, granted, valuations have been contracting for Adobe while there's been some expansion in the underlying industry, but I bet you that the industry is not growing at the same clip as Adobe is right now. Let's just look at price to sales while we have this. Now their sales growth is a little bit smaller. And here's another pretty hefty premium, trading at 8 times sales. Rest of the industry is down at 5.4, and I think the market, where are we at now? 3, a little over 3, right? Let's see what this says. 3.18 right now, okay? So, yes, it's a little rich up there, but that's the kind of market we're in. Look at the chart. Couple of things jumping out at me. This valley. Oh no, Bill, I got you. You're not interrupting at all, my friend. I wouldn't address it if I thought it wasn't important. Look at this interesting little structure. You have this no man's land, right? Where you have the gap up, and the gap to date has never been filled. And you know what one of those rules of trading is? Gaps get filled, right? So you got to be a little worried about that. But look at what happened As Adobe approached the 50-day moving average, it gave you a little rope-a-dope, came on down there, found a bid, went higher. Looks like it's done it here again. Commodity channel index goes from oversold. Looks like it's going to cross over that zero line. Could be moving higher. So if there was not an earnings report coming in here today and I was just basing this on technicals, I would buy this here. Nice little retrace to the 50-day. Also the bottom end of this range. Couldn't muster the strength to push it down. We should be back to attacking the highs. Now, what will a bad report do, though? Again, there's this gap. A bad report has a risk of running into the gap. So you got to be cognizant of that. Even though they did come in and defend 164.42 last time. What was that, the low? 164.42, yeah. 165s. They defended that last time. Bad report would not defend that. But are we really going to get a bad report out of Adobe right now? I don't know. They always beat, right? It's about that guidance towards that next quarter. With the economy rocking and rolling, potential tax deal on the table, what's the bear case here for Adobe? I'm sure there is one. I just can't think of the huge bearish case right now. Okay. Let's look at what's going on in the options market here. At the money's a 176, what's 176.82? So we'll do the 177.50 is the closest. At the money call, 335 by 350. We're going to call that 343. At the money put, going 425 by 440. Let's call that 433. So you're talking 776 is what they're looking at on 177.50 or 4.3%. So a little over, almost $8, almost on Adobe. Let's see what happened last time. Consolidated Surprise says a little bit of a move, little bit of a move, little bit of a move, little bit of a move. Haven't really moved a lot on earnings since August of 2016. So does that mean it doesn't move at all? It does a little bit of post-earnings drift. Sometimes a lot of it. There's one. Making up some big moves there, right? So here's another scenario where it doesn't look like you're going to miss out on much if you decide to wait until after the earnings report, right? And just catch a little drift. And we are going to do that Friday show. We're going to talk about Micron, but we're also going to check in and see what's going on these. But let's go out to the Jan expiration. Let's see what we got going on here. Now, obviously, out in January, you're not going to have the same strike prices because you never get all that. You probably get that on the 12th here. Yeah. So let's do this. Let's take a look at the Jan 12 expiration. Let me get this chart up one more time. 185. The market's pricing in what? It was 7 and change, right? So basically 184. So they're pretty much pricing in that also. 185s, right? One of the things I love to do, though, I love doing the halvesy, but we really don't have an opportunity for that right now, okay? But here's what I want to show you. A couple of things. First, how expensive it is to do the full spread here. Am I on the screen? There we go. So, let's say you went long the 177.50. It's going to cost you $5.90. Selling the 185, you're going to get back I'm just going to call it $2.90 just to make our lives easier. So $3 is the net outlay on this trade. It's kind of big though. It's kind of wide. The difference in the strike prices here is $7.50, right? So that means you can make $4.50 on your 300 or 150% rate of return, but you would need shares of Adobe to get over 185 at expiration. Now, what happens if you just pinched in a little bit? Pinch in on both. So let's look at cheaper one here. Yes, Bill, there's more volume on the monthly, but the spreads aren't painfully wide. And I think there's market makers there that would take care of you trying to put these trades on. And if it can't, then you can't. I just like these. I like having more I like having more options, more strike prices to show you guys some pricing stuff, okay? So that's what we're doing here. Okay. So then if you pinch in, instead of doing the 175, 77.50, 185, you pinch in and do the 180, 250, right? Your break even is going to be much higher because the long end of your call spread is out of the money now. Long end of your call spread's at 180. So whereas the previous one was going to be 177.50 plus the $3 or 180.50, this one's break even is going to be 180 plus what this is going to cost you. Now in this case, going long the 180, simultaneously going short the 182.50, it's going to cost you $1. Now the difference in the strike prices here is $2.50. So if you notice, being able to make $150 on a $100 trade is also that 150%, which is identical to this and this. Right? So there's no reason to do longer out one if you can stay in tighter, right? And you could still potentially make 150%. Now, your target price on this is going to be much less. It's just going to be 182.50 where it's got to trade above, not 185 in order for you to max out, okay? So something to consider if you want to be long is just going here. Now the problem is, if Adobe closes at or below $180, you are out the game, my friends. You're going to lose it all. But it only has to get to 182.50 for you to be okay. Okay? Or if you end up scooting it down, it's going to be pretty much the same potential return, your same upside that you could make, but your break even is going to change. So look at this. If you went long the 177.50, it's going to cost you $5.90. Simultaneously shorting the 182.50, that's $3.88 you get back. So $202 is the net outlay that you're going to have on this one. Difference in strike price is $5 minus that 202. It's $298 on 202 or 147%. So not quite the 150, but basically the 150. I mean, it's the same thing, right? Now, why would you do that, though? Well, now your break even on this trade is 177.50 plus 202. Wait, hang on, sorry. 177.50 plus 202 or 179.52. That's your break even. So it lowers your break even, and your upside potential now is going to be pretty much great. Okay, so there's this. All right. So that's if you went out to the 12th expiration. When you go out to the 19th, what happens is now it's only every $5 that you've got the strikes. Load this up here. So it's every $5 that you've got the spreads now or the strikes instead of the 250. So what you're going to end up doing here is you're going to have to buy in the money call, or do the same thing where you go a little bit out of the money at the 180. So you do have two choices. Now the 175 call is going to be more expensive, obviously, because you've got a $1.80 of intrinsic value already in it. But this is also going to lower your break even considerably into this trade. All right. So you got a lot to choose from. I kind of like the idea of this 177.50, 182.50 to catch some post earnings drift and get, whatever. The other thing is just waiting until after the report here, because we know that Adobe doesn't really move all that much on the report, okay? So you could wait till after the report, or like Wild Bill's bringing up, start looking at the butterflies. So what you want to have happen in these butterflies is you pretty much want a couple days after earnings to go by without much happening, and then the post-earnings drift to finally catch and start running up, okay? So that's one way to do it. Because your further out option that you have in it is going to give you lots of potential. Because it's going to stick around while the shorter end is done. The other one, and again, this is why I try not to I don't want to overcomplicate these things with you guys. When you buy one or you sell one, right? Then you buy two and then you sell another one out here. Because it's just hard for me to do that on this screen. I need to find an easy live visual to pull up these butterflies that everybody can follow along with. But until I figure that out, how to show that, I don't want to get into them too much. And that's why I'm always resistant every time we talk about it. It just looks so chunky. Here it's easy because I can say, oh, I buy there, I sell there, this is what it is, boom, boom, okay? Versus, just visually it's hard for me to do it for you guys. Okay, now let's get back to business. So where I'm at, what I think is going to work here is the 177.50, 182.50, okay? So going long, the 177.50, going short, the 182.50 for a 202 net debit, okay? Ah, you can hear the AC/DC. I'm glad. I'm glad you guys can hear this. Let me type this in here. The bull debit, long January 12th, 177.50, 182.50. Call spread for 202. Net debit. It's a bull debit. Bears. We were saying 164, right? Is that? Yeah, 164, 165. This is where that floor is in the stock. And if it blows through that, forget about it. Also, the options market's basically pricing in a move to this 170 area, okay? I don't think you have to be that aggressive with this if you want to be a bear. Where's the 50-day? Let me pull this up again. 50 days just under the current price. So a bad report's going to force it under the 50-day. It's got to retest this 165, no question. And if it gets really bad, it goes well underneath that. Okay. So that's all the way to here. That's a little too expensive, I think. And the added amount of return you could potentially get by going that far out just doesn't do it for me. What if you just do this? The 177.50, 172.50, or even the 175, 172.50. This one's pretty good for the Bears. You go long, the 175 is going to cost you $5.40. Simultaneously going short, the 172.50 is $4.45. So your net outlay here is going to be 95 cents. The difference in strike prices is $2 minus that. Minus the 95 cents is $1.55. So again, 163%. So they're basically 150 is what you're going to be able to make on these trades here with Adobe. Bear debit. Long January 12th, 175, 172.50. Put spread for 95 cents. All right, guys, but again, these bad boys don't move that much on the report. So you can basically sit on your hands, wait till after the report, and then go ahead, okay? And then go ahead and see what's up. Try to make some moolah that way. Let's go into this front week just for giggles. See if there's anything dirt cheap. Remember, I was saying a break. A breakdown to the downside. There's this cliff here at 165. If it gets in there, it's got to go. I mean, I could easily see it go to 158. It would take something very bearish for that to happen. But that's almost the definition of your lotto, right? I think the lotto's got to be a bear case. The 165 puts, perhaps. Just in case. I'm looking on this 187.50 on the call side. mean, you got to just think it blows through to new levels. Finds its way to 200. I mean, it's just I just don't think you're gonna have a huge. What's the biggest move that we've seen? 8%. Look at this: 6%, 2%, another 8%. Here's an 11% in 2013. 2013. $8 seems like a lot. All right, so it's stock here at 176.86. You're talking 191 would be an 8% move, which is basically the biggest that they've ever seen. Following the earnings report. Yeah, it's just not worth it. I don't think it happens. If you're going to do a lotto, I think you should do a bearish one. The 165 put. In case the bottom falls out. I give that a 1 in 20 chance of happening. Lotto's a 165 put. If you're holding 100 shares of Adobe, and you're looking for some protection, I think that would be a good place. Can even creep up some more. I mean, we've talked about that in the past. How to finance your own protection if you're long 100 shares of Adobe. I don't know that anybody in here is, so we need to have another session where it's just about protecting, just using your protective collars to make sure you don't lose a bunch of money on earnings reports if you're along the stock heading into it and you're nervous about things, okay? All right, so I think the trade that pays is the bull debit. Although I would like to keep an eye on Wild Bill's butterfly, so we can talk about it. It's just even when I did, we did a few butterflies before. I did some calendar spreads also. Even when we did them, showing them in the GBU is still kind of clunky too, because they're multi-legs, and we're like, oh well, if you can use this part and after, and then sell this, and then just hold on. I mean, it's just too chunky for me to. Remember, guys, while a lot of you have been around here for a while, we've always got a new crew coming on, so I don't want people going cross-eyed trying to figure out what the heck I'm talking about. We're trying to keep this, beginner to intermediate, I suppose is what it is, and keeping it simple. And again, for the beginners out there, don't go rolling the dice on something you know nothing about, and really, waiting till after these earnings reports, seeing what the stock did, especially a stock like this, much less risk than doing anything before earnings. And most people will tell you that this is crazy and it's gambling. And it's pretty crazy, I'm not going to lie. But it's not really gambling. Well, okay, so maybe it's gambling, but we're not gambling away our life savings here. $100 here, $200 there. Stocks that we think are going to go up. It's actually safer than buying the stock, 100 shares of the stock outright, as we've proved again and again. All right, guys. I got to get out of here and finish up lots of work that I got because I keep getting interrupted today, like I was telling Trevor. Everybody and their mamas wants to hear about Bitcoin from me, which is frustrating. I don't know why, but they do. And that's it. So that's all I got for you here today on Zach's Live Trader. I'm going to do the good, the bad, and the ugly tomorrow, but there's not going to be a show. And then Friday morning we'll have Micron, but you betcha we'll be discussing Adobe as well as Costco because they're both going to report on Thursday. So Friday morning we'll be able to talk about them. So Thanks again so much for hanging out with me here today on Zach's Live Trader, and I will see you all Friday. Have a good one.